Hey traders, welcome to a crypto market and global macro update. We'll be going over a bunch of different assets today. We'll be going over the NASDAQ, S&P, Bitcoin, gold and silver, US dollar, which has been plummeting, as well as taking a look at Ethereum and the potential ascending triangle that we're currently seeing with the price squeezing up against the around 620 range. So first things first, let's look at the equities for the day. And the first structure we're looking at is on the NASDAQ, the NDX. We see a nice symmetrical triangle, and then if we are looking at the potential next target for this zone, let's just look at the geometry of this structure. Breakout round, let's say almost 14K-ish is going to be the potential first level of resistance or take profit, looking at the geometry of this symmetrical triangle. So overall, we do see a break to the upside. We see a slight pullback here, some hesitation, but overall we are seeing the price hold this previous resistance at around 12.2K. We can extend this beyond this zone, so we've made and broken the previous all-time high and formed a new all-time high, and then we could see a slight pullback. But I think with how the US dollar is performing right now, really plummeting to the downside, I think we're going to see this overall asset and the overall risk on assets move to the upside, along with S&P 500, which we'll look at right now. Somewhat of a similar structure. We saw a descending triangle here. We saw a break to the upside, a pullback, and then we saw a contraction after the first impulsive push. And this is a symmetrical triangle, which is pretty well respected. We see a series of higher lows above this previous descending level of resistance. And it looks like it's completing its contraction, and we're going to have an impulsive push to the upside. We already see, if we go to, let's say, the 4-hour, very well respected. I'm just going to pull up the snip to take a picture of it, and then we can discuss what we can see right here. So we know that this level is a major level of resistance, which turned into a new level of support. This was the initial resistance. That was now a demand zone. We see this initial zone, we don't really notice it because this is just a horizontal level which is turning in from a resistance into a new level of support. But then we see this zone, which is higher than the previous zone right here, which is creating our ascending zone, and that's where we get our ascending support zone. Right here, we see a nice series of higher lows, these lows, and then a higher low right here. And then what do we see is validation 1, 2, 3. It would be nice to see a little bit more, but we do see hesitation right here before the break. And once we see that break, we use that previous resistance for a new level of support within that zone of confluence. Right around there. So we see that previous resistance turning into a new level of support, and then this previous high and this previous high was still a level of resistance, and then we saw a very tight contraction and consolidation within this area, and I think we're going to get our expansionary phase here very soon. We've already seen the price break this previous high, and then we see the price hold this previous resistance as a new level of support, and now we're getting a slight contraction yet again. So I think on a smaller time frame, we're seeing some level of price action structure that could create an impulsive push to the upside. So I'm not going to be particularly trading this, but I will be using this overall as a risk on gauge along with the NASDAQ 100. So that's going to be the outcome that I think is going to occur on the S&P. If it breaks this previous low right here, then I'd be a little bit worried about a potential breakdown where it's going to come back all the way maybe to this resistance or further down. But overall, as long as it's going to continue this way, I'm going to be looking for longs. So that's going to be the S&P 500 and the NASDAQ. In terms of the VIX and the volatility, we do want this to continue to drop. What we're ideally looking for is something similar to this. Maybe we'll have some pullback within the S&P, but overall, that is something that we're going to be looking for, just like so. Can't see where that other dot is there. Not sure. But anyways, we're looking for something along the lines of that, where we're going to get a nice, slow pace. Oh, wow, it's all the way down there. There it is. Maybe something like that. That would be a really good situation for us to be in, because that's going to be really optimal for, I think, Bitcoin and other altcoins to really roar. Now we're going to move on to gold and silver. Silver is looking a lot better than gold in my personal opinion. We're holding that 2250 zone very, very well. We're seeing a nice contraction with a series of lower highs, squeeze the price towards the apex. Could be a little bit longer, and the main zone we do want to see break if we're going to get a nice picture here to talk about this a little bit further. We see this level, which was a previous major level of support, which is now a new level of resistance. So even if it's going to be consolidating and break the descending zone we see right here, I'm not looking to enter until we see the price trade above this $26 range. Once we see that price break this zone, we have a break in market structure. So the price obviously has to go from a consolidation at one point to then breaking a market structure. Yes, you can have fake outs, but at the end of the day, that's the highest level of confirmation you can have in terms of a price action, is not only the actual price action pattern breaks, which would be this descending zone right there, but often you can get a little poke out and then it hits this previous high and then it fades and then breaks below the support and then everyone gets out, and then this is where it really moves to the downside. So at the end of the day, we're looking to see a validation by breaking this $26 range, holding it, really seeing that buyers are interested, and then once you see that momentum kicking, you can put a stop entry above the previous high. You could even put a limit order here as or really whatever you're looking for. Obviously, it depends on the entry strategy for your certain plan, and that has to be tested. So now we're going to be looking at gold, which is going to be this guy right here. Hasn't been doing awesome. I definitely look at silver as a better looking structure, I think. I was looking at this zone to possibly hold, where we get a little bit of hesitation going on here, and then this is the first low, second low. Don't really get that nice hold that we're looking for, and I think unfortunately we're going to have to move it kind of like this and see if that's going to be giving us an opportunity to see a support. Definitely going to wait on this one for gold. Obviously, investments, you're not really going to be selling bullion or anything anytime soon, in my personal opinion. But in terms of leveraged trades, definitely going to be patient with this one. I think on the weekly, it still doesn't look that bad because we had a massive push to the upside. There's going to be some level of pullback, just like we saw back in around February and March. Obviously, there was a lot of things going on with COVID, and basically every single asset fell except for the US dollar and the Japanese yen and a few other safe haven currencies. But overall, that was a very difficult time for most assets. So does it kind of make sense to me that we're going to get some level of pullback? Obviously, because we broke that all-time high, which is very significant at 1900. We made it into the 2K range. We're going to have some pullback, I think, before the next impulsive push to the upside. But I don't expect this to just fall all the way and not really pick up steam, because the US dollar is really plummeting, and we'll take a look at that right now. We've been talking about this really capitulating after it broke the $92 range, and we're really seeing a massive fall, and I really think that we're going to hit that 89 range, which we took a look at on the weekly. That zone right there, look how well respected that area is, and we can see that there was a lot of hesitancy and a lot of sensitivity within that area in 2015. So seems like a long time, but that's going to be the next level, and if it falls beyond that zone, we could honestly see a massive double top right here. Would be pretty unbelievable to see, but you never know what happens in life, and if the central bank is continuing to print money and really create a capitulation of the US dollar, there's nothing that really normal everyday people can do other than protect themselves by purchasing sound money. Gold, silver, cryptocurrencies are definitely your, I'd say gold and silver are your safe bet, whereas cryptocurrencies are a little bit more speculative, but I'd say it's extremely important in any person's portfolio if they want a well-diversified hedge against central banks being irresponsible with the powers that were bestowed upon them. So, looking at this failure to the downside, I really don't expect there to be a massive pullback, but we could see something. We can see the impulse pushes have been extremely consistent and overall very straight shot from A to B. Usually it's not like that, but I think that's going to be the next level of support around 89. So I think we got a long time before we see a major hesitation like we saw in the two previous pullbacks. So I am going to expect the other risk on assets like S&P, NASDAQ. I think Bitcoin will do pretty well. Ethereum will do well. We are looking at a continuation pattern on Ethereum right now, which we'll get into a little bit later in the video. But overall, we are looking for risk on assets and continuation patterns within those assets. In the shortest, simple answer that I could give. So now actually we're going to look at Bitcoin and then we'll switch to Ethereum. So we have talked about BTC consolidating and then squeezing and then moving up to the upside within our Discord. We've already talked about it multiple times and it does look like it's holding pretty well true. We could create an ascending zone right here. I wouldn't be too picky if it does actually fail a little bit, just because at the end of the day I don't really mind. I'm not going to be looking for shorts or anything. I would like to ideally see this low hold right here, so even if it does pull back a little bit, we could just move this down, and then that could be the nice ascending zone that we're going to be looking for. So even if it does pull back a little bit, like so, I do not mind. It would be great to see a nice ascending zone hold the price, creating higher lows, and then you get your horizontal level of resistance, and then like always, you're looking for that break and retest where, let's just get the picture right here, where you're getting that nice validated previous resistance. We can see at around 19.6, 19.7, that previous all-time high zone, and then you're going to be looking for that pullback. Could come back down a little bit in here, but you're really looking for that confluence zone of the horizontal zone and the ascending zone, creating a certain zone or level, which is not like a single price point, but it's a zone. You're looking at the hour chart, you're looking at, depends on what you're trading, but if you're a swing trader, you wouldn't really look at like a exact price point. It'd be more a zone that you'd be looking at. So that's what we're going to be looking out for. We're seeing nice higher lows right now, so it's looking very favorable. Like I said, even if we dip a little bit, we're looking for horizontal zones because we can adjust this ascending trend line. We don't marry our trend lines at a certain point. If we have 4 validated zones, we can then say that's a confirmed area, but at the end of the day, it's semi an art. It's not a complete science. There's no one single perfect way to conduct TA, in my personal opinion, and you have to do what suits you best. So that's going to be the look at BTC. Let's just make that okay. One thing I do see is a lot of sell pressure, and we can see that within the Performante's average Bitcoin volume indicator. It accumulates all the different volumes in the different exchanges that retail traders trade in, as well as some institutional, and then it averages them out in order to get the, I would say, best possible data, just because if you're only using one exchange, you're not able to get the full understanding of the volume in the market. And if you're using stuff like VSA, volume spread analysis, it makes a lot of sense to have the best data you can find, or at least generate for yourself. So it is free. Definitely check it out on TradingView if you can. Now we're going to go on to Ethereum, which does look pretty favorable. Same sort of structure, this ascending triangle zone. We do see a nice set of higher lows squeezing the price towards this 620 area, and what we're looking for is to see at least this level hold, which is around 585. If it does hold that zone, maybe there's going to be a wick to the downside. We could still manage to create those higher lows, creating a nice triangle, but if it fails to hold 850 as it's slowly falling, we may have to readjust, because this is the zone really that we don't want the price to pass. If it breaks that zone, that's going to be a mini double top within a larger double top. And what I mean by that, if you don't understand, is we see this right here, and then we could see a double top there, but within the double top, this area here is also a double top if it breaks this zone right here, right? And then we're going to go down here, and then this double top will form, and then we're going to see a break, retest, and that's not going to be a good situation for the investments in Ethereum. So we're going to be looking for this to hold ideally 580, and then we want to see a squeeze, and then once we see a break, I think it'll really shoot to the upside. We will look at the BTC Dominance and the overall altcoin market cap, just because they are useful tools to understand where the altcoins are in relation to BTC. So that will be the last thing we'll look at within the video. Let's bring that just back right here. All right, so let's open this up, and then we're going to look at the dominance of BTC, which is pretty important. Always a good chart to look at. So when this is moving to the downside, it means that altcoins are really doing a lot better than Bitcoin. It means that the overall cryptocurrency market cap for altcoins is growing at a greater rate than Bitcoin's, which is decreasing the dominance of Bitcoin's market cap, which is the chart that we're seeing right now. So what we're currently looking at in terms of how the structure is within the chart is this was 2017 massive impulse push to the downside, indicating that when there is a bull market in crypto, alts take over because there is mass speculation. When there's a bear market, obviously a lot of people go into BTC. It holds its value a lot better than almost every crypto, every alt, except for a few that are outliers. But 9 times out of 10, you're going to have an alt that's going to bleed at a faster rate than Bitcoin. So Bitcoin regains a lot of dominance. So since we saw a series of higher lows there, we were potentially seeing a zone, but once this support held, we then created a descending triangle. So what we're currently seeing right now is our first level right here, which is our anchor point. We see 1, 2, 3, 4, very strong level, and then we see this previous resistance, new level of support, creating our support zone. And this is a squeeze that's occurring within the BTC dominance. And I think what we're going to be seeing potentially is this support zone failing, and then we're going to see another, maybe not that aggressive, but some level of capitulation where I think that alts are really going to start to take over in 2021. Definitely not in 2020. I think BTC is going to be the place to be, as well as maybe Ethereum, depending on how much exposure you currently already have. But I think Ethereum is definitely a safer bet in terms of the alt world. There's some that are relatively weak compared to things like Bitcoin and Ethereum right now, so it just doesn't make sense. But some have been doing well. XRP actually has been doing really well. Had a massive move to the upside. We might take a look at that in the Discord a little bit later tonight. But that's going to be the end of the video. Thank you very much for watching. I really appreciate it. If you found this video useful, informative, educational, it would be great if you would drop a like and give us a follow so we know to make more of these videos. Thank you for watching. Until next time, have a good one, traders.